Hello, welcome to Rid Chart Talks.
Welcome to the deep dive. Today, we're jumping into something really specific and timely. We've got an AI-powered analysis of the Nifty main market, zeroing in on trading opportunities for tomorrow, July 9th, 2025. Our goal, well, it's to quickly decode those key support and resistance zones, get a handle on the RSI trends, and basically map out some clear intraday entry points for you. This isn't just abstract stuff. It's meant to help you prepare for tomorrow's actual trading. We're going to see how this AI views the market.
Yeah, and it's genuinely interesting how this kind of precise data-driven analysis gives such a sharp picture of what the market might do. This analysis was done on July 7th using a 1-hour chart, shows Nifty closed at 25,522.50. And what's key is the price has been sort of consolidating, moving sideways in a tight range after a pretty strong uptrend, which, as the AI notes, often signals that, well, potential breakout could be brewing.
Okay, right. Consolidation. So let's unpack that. How does this AI analysis actually guide us, like through the potential long and short trades? What are the specific conditions?
Absolutely. The AI gives really specific parameters. For going long, so betting on an upward move, the entry point is flagged above 25,540. The AI sees this as like a key confirmation level. Assigned buyers might be really taking control. If the price does cross that, the targets are set at 25,600 and then 25,670. And the stop loss, that's at 25,480. So that offers a pretty compelling risk reward. We're talking 1 to 2.5 or even better. What's also interesting is the AI highlights a strong base. It's kind of formed around 25,420 to 25,460, suggests solid buying interest down there.
Okay. That's a clear game plan if things go up. Pretty detailed. But, markets can turn on a dime. What if the Nifty decides to head south instead? How does the AI prepare us for, well, a downside scenario?
All right, good question. If the market starts looking bearish, the AI points to a short trade setup. The trigger for that is an entry below 25,460. That would suggest a breakdown from that key support zone we mentioned, sellers gaining the upper hand, basically. Your targets then would be 25,400 and then down to 25,340. The AI actually identifies that 25,340 level as being part of a strong demand zone, so a place where buyers might step back in. Stop loss for this short setup is placed at 25,510. Gives you roughly a 1 to 2 risk reward. And the strategy, it's kind of reinforced by the AI detecting other signs too, like maybe a failed breakout attempt with a bearish candle and a spike in volume, suggesting momentum is shifting.
Got it. So specific triggers, whether it moves up or down, very conditional. Now, beyond just the price levels, you mentioned the AI looked at momentum. What about the RSI, the relative strength index? What's that telling us right now?
Yeah, the RSI. On the 15-minute chart, it's currently sitting at 59.45. So that puts it in, let's say, neutral to maybe mildly bullish territory. Not extreme either way. Importantly, it bounced earlier from oversold levels down around 39. That means the asset was looking potentially undervalued and due for a bounce, and now it's trending upwards. And crucially, the AI notes no divergence is currently observed.
Okay, what does that mean, no divergence?
That means the price movement and the momentum indicator, the RSI, are basically telling the same story. They're confirming each other, not contradicting, which suggests there's some underlying strength, but it also, highlights that resistance needs to be broken for the upward trend to really continue. Otherwise, things could shift.
Right. This deep dive really has illuminated how these specific price points and indicators like the RSI offer a practical roadmap, doesn't it, for potential NFTY moves at least. And it really hammers home that these are conditional strategies. It all depends on the price actually hitting those triggers the AI identified. So what does this all mean for you, the listener, when you look at this kind of detailed breakdown?
Well, what's powerful here, I think, isn't just the list of numbers. It's the strategic framework. It gives you these precise conditions. Like, consider going long, only above 25,540, aiming for 25,600 and 25,670, with that clear stop at 25,480 for that decent risk reward. Or, on the flip side, think about a short, only if it breaks below 25,460, targeting 25,400 and 25,340, with a stop at 25,510. It also clearly pinpoints those crucial support levels around 25,460 and 25,400, and the resistance up at 25,540 and 25,600. Plus, those distinct demand and supply zones it mentioned. It's about having those specific parameters ready. Makes decision-making potentially sharper.
Exactly. And, if you think about it more broadly, learning to dissect these really specific triggers and conditions, like in this market analysis, it can actually sharpen your ability overall, your ability to spot crucial turning points or opportunities, not just in trading, but maybe in any complex information you encounter. It kind of encourages you to apply this detailed, conditional way of thinking elsewhere, to look beyond just what is and start seeing what could be based on specific factors changing, something to mull over.